So let's go ahead and open up today's chart. The first thing we're going to talk about before we actually put a single anything on this chart is a couple of definitions that you all must understand, because it's imperative to understand what we're doing in here at the simplest levels possible. Because think of trading as like you're building a Lego castle. You got to start on the base and build it up block by block. And if you're missing the blocks at the bottom, it's going to turn into a Jenga tower. And those turn out to be wobbly and fall over eventually. Okay, we don't want that. I want you guys to have a solid foundation about trading, all the way down to a level that seems stupid or insignificant, but it makes a huge difference. Number one, understanding what probabilities are and what they mean to us in this particular setting. Probability is a number that reflects the chance or likelihood that a particular event will occur. Now, I think we're all smart enough to understand what that means. Okay? So we're going to get into that when we start talking about entries. Number two, patience. The ability to accept delay, suffering, or annoyance without complaining or becoming angry. Now, I know a lot of us, including myself, at times struggle with a lack of patience. And then when we exercise that patience, oftentimes we're upset, irritated, or annoyed because we missed what ended up being a move that patience kept us out of taking. So keep probabilities, patience, and the last one is discipline. Discipline, orderly or prescribed conduct or pattern of behavior, self-control. All three of those things are absolutely critical, imperative building blocks of any trade, any strategy. Without those three things, you're setting yourself up for a very, very bumpy ride. Okay? Does anybody know what the 3 C's of discipline are? I've never actually talked about this, but I think it's important, especially if we're going to start at the bottom of the foundation here. And for those of you who don't know, which is probably most, they are clarity, consistency, and consequences. Now, what's clarity when it comes to discipline? Well, clarity is understanding the do's and don'ts. You want no gray area, no muddy middle, if you will. Okay? Consistency. Repeat good habits to gain consistency and confidence. Okay? And then consequences. If you fail to achieve clarity and consistency, you will be subject to consequences, which in this business means losing money. Okay? If you happen to be rewarded despite lacking clarity and consistency, you will quickly create a muddy middle. So what this means is that even if you don't have clarity and consistency, you may still gain the reward as if you did, and the consequences aren't going to be negative. The problem with that is that if you get lucky enough time to do that, then you'll lack the clarity and you'll lack the consistency. And when you become unlucky, you won't know why. Understand what that means. And this is why it is imperative that when you take your trades, you always wait for your setup. And when the setup presents itself, you take the trade. Whatever the outcome of that is going to be what it is. The important part of doing that is this. If the strategy is right and correct, then statistically speaking, you will win more trades than you lose. However, if you muddy the waters, you lack the clarity, you're going to take trades, and some will work and some will not. And when they don't, you won't know why, because you muddied the water. If they do, and you did it with muddy water, you don't know what worked and why it worked. So this is where it starts. You must have full self-control, stack the probabilities in your favor, have the patience to wait for that to happen, and have the discipline to do what you're supposed to do when it does happen. That's the start. Now, let's talk about break and retests. I'm going to turn on, this is Friday's chart that we're looking at here, guys, okay? I'm going to turn on a bunch of stuff. And I'm going to turn off a couple of these trend lines because they don't matter. Okay, so let's turn off some of these down here. Give me 1 second. Oh, leave that one on. I'm just getting rid of lines that were not that are not relevant to what we're doing here. Okay, I think everything else except for this guy up here. Oh, we don't want to do that. Let's just hide this one. Okay, so let me first start out by saying this. On this chart, there were 16 clean break and retests. 14 of them were winning trades. 2 were questionable, but if you were quick, you could have scalped some profit. We're going to go count those as losing trades. Okay. 14, and we will go over every one of them because the ones that were worth taking, we actually talked about. Now, number one, I wouldn't have guessed there was that many. I went through this chart 5 times before I got to that situation. Then I went back and counted how many of those were winning trades without confirmation of the things that I'm going to tell you how to stack probabilities in your favor. That is just straight up break and retest candle plays with no other probabilities in your favor. 14 out of 16 on this particular day would have paid. Decently, I might add. And with that, let's talk about entries. So the only reason break and retests are coming into this is because it's one of my favorite plays. It's easy to identify. And when I teach you how to stack the probabilities that I look for, you might feel a lot more comfortable in taking them if you're not currently. Okay, so number one, this yellow line right here. All of these lines you need to understand are important. You've got, for those of you who are new here, my blue lines are my pre-market support resistance lines. My yellow lines are originally orange and they turn yellow when they get touched. And these teal lines are futures levels. Okay, now for those of you who are in here right now that are members, on Monday, I am going to show you in real live chart from Monday morning. I'm going to show you how I plot all of these lines every single day. Okay, so that is going to be what happens there. Now, as far as good entries, number one, first and foremost, you should wait long enough to determine some sort of trend. I don't mean waiting all day to see if the day is going to be trending. I'm talking about a move up, a pullback, and then a continued move up, taking out the original high at the time. At least then you have a confirmed uptrend. Same thing to the downside. You move down, you pull back, and you move down, taking out the most recent low. That's rule number one. Okay, that usually happens pretty quickly at the beginning of the day, but it definitely happens almost always within the first 10 minutes, which is my rule of waiting. Now, but Jimmy, why do you have an arrow here? Because you crazy bastards ask me all the time what you think or what I think is going to happen at open. And if I'm not mistaken, I might have nailed every day this week. And you people, it scare me by taking these trades, okay? I don't think it's a wise idea, but the number of folks that were done within the first 5 minutes of Friday was staggering to me. A one and done trade, 40% for some people, 30% for others, 60% for others. I mean, if you held all the way up to here, you made over 100%. But that's neither here nor there, okay? What, though, could we use if you choose to be aggressive at entry to stack probabilities on a day like this in your favor, you might ask? Well, number one, our top 10 at the time was all green. Number two, ADD was very green, okay? Anything over 1500 plus on ADD means that the majority of the S&P 500 is moving up. That's good information to know. Okay. But it doesn't even have to be ADD strictly that makes you take a trade, and it never should be. Okay. Now, for this particular trade, here's what we got going on. We got to and broke our first level of resistance. All of these yellow lines are a form of support and resistance. We broke it on the very first candle. Now, what is a retest? A retest is a break, in this case, a break of resistance, and then the next candle treats it as support. And that is exactly what happens here. Now, what this means for you and why we typically want to wait for the color of that candle to be the same color as your breaking candle is very simple. When you move up and break through a resistance, that would indicate that there's a lot of buying going on. If the retest candle stays above that line of resistance, turns it into support, and stays green, what does that tell you? It tells you that momentum is still in your favor, at least at that moment. Okay? If you immediately turn red after hitting a resistance line or getting through a resistance line, that means that the line of sellers that were there to create that line of resistance to begin with are still there. Okay? That is what makes break and retest so effective. If you break through this, stay above it, and still have momentum on your side, we are looking for a target of the next line of resistance as your take profit. Now, admittedly, you're buying the high a day here. This purple line was not there until these candles printed, because they made another resistance or a support line between our first target and our second target. Now, why is there an orange box around it? Well, that's my orange box theory. If we're moving up or down, whatever direction we're moving into when we hit a state of consolidation on a very high percentage time, it moves out of that area of consolidation in the same direction that brought us to it. Okay? Now, for the folks who were in this trade this morning, I was suggesting taking profits here because we had found weakness. One of my personal rules, if I'm playing a breakout, which I really try to avoid doing, is you have to understand when and how to spot weakness in the move. Because usually weakness would indicate that the momentum is dying off and the market might turn around to take a breather. Okay? If we are in an orange box or we're in a move like this and you want to hold through this area of consolidation, go ahead and draw you a box like this if I don't. And if we close out of the bottom of that box, get out of the trade. use that as your stop loss. If we break above the box, well, we're working our way up to the next line of resistance. In this case, was all the way up here at 426.70. Okay, but let's not get too far away from a good entry. The reason I wouldn't have recommended this trade is because how I'm starting to determine what is a good entry is how close to that entry I have proof for a stop loss. In this case, and the way I do it, and we'll jump over to, let's do it. Well, let's just do this right here. Hold on. Right here. Okay. If we were to play this candle here, we're getting in on the purple line. We have an uptrend. We have a break. We have a retest. Green, go. Okay. My stop loss is going to be just below these wicks right here. Now, why is that? Because we got to a level of support and resistance. We turned it into support, and we found support very close to that line on very recent candles. So when people ask me, Jimmy, how much do you allow a stop loss to be? I don't pick a dollar amount or a percentage amount for my pullbacks. I'm picking something on the chart that if this support at the bottom of these that kept these here from falling lower breaks, that's when I'm getting out of the trade, because the chances of us breaking below this support without running back down to the next support is very low. And that right there, that pullback there would cost me in the positions that I play at least $700 to $1,000. I ain't down with that. Now, I do play candle closes. I play candle closes because oftentimes a wick will come down here, stop you out, and we've all had to go back in the direction we wanted to. The one thing you must understand if you choose to play that way, two things are happening. Number one, you're not using mechanical stops. You're using mental stops. And if you're using mental stops and you don't have a strong mental capability of stopping yourself out, you're going to cost yourself a small fortune, and you're going to put yourself in a situation where you become a hold and hoper. However, if you're a mental stop and this thing wicks down but closes back above these, you're still in the trade. That is something for you to determine as a trader with your risk level. I have lost a shit ton of money by having mental stops, because if this thing turns into a Twizzler and I can't get out, that's something I would market out of myself, and you will hurt yourself. But I am willing to take that risk because I know that more often than not, this setup works a high percentage of the time. Okay, it is impossible. It's impossible to take a trade without the risk of potentially losing money. It is impossible to take a trade without the potential of losing money. Understand that, because if you take a trade with the fear of being wrong, you're already putting yourself on the wrong foot. I understand the fear. I know it sucks to lose money, but it's part of the business. So all we can do is stack probabilities in our favor to help minimize our chances of losing. What are those probabilities? At least the ones that I use. Now, this is going to kind of blow you away. I know it blows me away. So let's navigate on over to here. And we're going to go trade by trade. And I'm going to explain what everything's going on here so you guys can see. And we'll go from there. Okay? So for those of you who insisted on taking this trade and you waited for an actual break and retest, let me tell you why this trade most likely worked in your favor. So as you guys know, on my left, on my screen to my left during the trading day, this is what I'm looking at. Now, I don't use the futures chart over here, which is what this is over here. However, I use ADD, which is this chart, a 5-minute SPY chart, a 3-minute Qs, 3-minute Apple. Okay? So if we go back over here, we have a breaking candle of this resistance, and we closed above it. Now, this is when you need to start looking at our probabilities. So this candle started above this line. It's printing green at the moment. We don't know where it's going to close, but it's definitely starting out green. What am I looking at? Well, the 5-minute SPY candle is green. The 3-minute Q candle is green. The 3-minute Apple candle is green. The ADD 1-minute candle is green. Now, if you count these as 25% each probabilities, that is a 100% 4 for 4 go trade in my book. Okay? If all 4 of these are green, I consider that an A+ setup, especially and only if it's on a line of support, if you're trying to play calls, or up against the line of resistance, if you're trying to play puts. With all of those 4 candles that are green in this situation, you want to see red for your put situation. Okay? So break, retest, number 1. We broke resistance. Number 2, we're on a level of support. Number 3, 5-minute SPY looks strong. 3-minute Qs, green. 3-minute Apple, green. The exact candle on ADD, green. All green. That is a go. Now, what happened if we lined all those up? Well, we shot straight up. That was a huge trade. Now, the only problem here, and the reason that that arrow is not green, indicating that I took the trade, was that it's the high of day candle. I don't know where this is going to stop and slow down. So you have to be able to understand how to spot weakness in the market in order to know when to take your profits. Okay. Now, I believe that on this day, I was suggesting people take profits in this orange box. Because for me, if you caught that move, first of all, that would have been $1,000+ trade for me. And I would have been very happy to have taken that. And we would have taken profits here, not knowing that it was going to shoot up another, few cents. But it could have very easily just turned around and came back down to support, which is what I was looking for. Okay. So with that, risky because it's too close to open and we don't have any current price action above this point to use as a particular exit point. Okay. And this line is too far away for me to just say, get in here and hold it all the way up to the next target. Okay. That's too much for me. Thank you. Be positive. So what happens is, why is this circle here? Well, for anybody who is holding on to this trade, I was trying to get you to move your stop losses up, trailing your gains. At this point, there was no reason for you to get out of the trade. Nothing was slowing down. It was going up. You didn't even get your first red candle until 7 minutes into the open. And even then, we were saying, put your stop right here below this candle. Okay? Because no matter what, you would have stopped out with way more profit than you were probably imagining in the first place. So we moved sideways. Now, once this candle printed, we moved our stop up to just below that wick. And once we printed this candle, we moved it up to just below this purple line. And once that candle printed and closed, we moved it up below this wick, and so on and so forth. And that is why this is stopped out here, because we had ultimately moved our stop to being just under this green candle right here, and voila. So no, You didn't catch the very tippy top, but guess what? You caught 98% of the move. So move your stops up. Follow your winning trades. And if you need to protect yourself and remove all fear, simply put your stop loss after you get into the trade and the trade goes in your favor for a little bit of time. You don't have to wait till you hit your profit target, but just put your stop loss at your break-even price so that no matter what, if all hell breaks loose and that thing turns around and comes screaming down against you, you have stopped out with absolutely no loss. That's it. That's how you remove fear. And if you get your entries right, then you will find that the trade quickly starts to go in your favor. And you don't have to worry so much about trailing your stops so quickly. Okay, now, so we stopped out because we were able to move our stop up to being right below the last green candle up here. Okay, it gives you a little bit of room for it to breathe. If it pulls back and then goes up, you might have stayed in the trade, you might have stopped out. Either way, we don't know, right? We were waiting for a breather at this point because it's the open. So we pull back. We hit this line of support. Now, I was personally waiting for this purple line to hold as support so that I can get in calls and ride it up to this yellow line. But what happened? It broke that support and continued down. And what we're looking for in this scenario, when you break support, SPY wants to move down to the next support under normal circumstances most of the time. And ultimately, we turned this support into resistance and made it straight down to the next level of support. Okay, so what do we got here? Now, this trade was called out because I said if we can break this support, we'd be headed down to 424.99. 424.99. Okay, if we break support. However, me being a little bit more conservative, we had the break, we pulled back, we retested. It's currently holding as resistance. We get another pullback. At this point, I would have taken this anyway, but I wasn't ready. So I was ready for this one. But let's go look at what ADD, the Qs, and all of our other things are looking like at 946. Do I have one there? Nope, we're gonna talk about the one that I played. So this one here, 949. 949. Red candle on ADD, red candle on Apple, red candle on Qs, red candle on SPY. 100% go. And where does it go? Right down to our next profit target. Now, why did I take profits here? As you guys know, I'm a little bit overcautious sometimes, but I looked at this particular level of this wick as support. And so when we got close to it, I took myself out of the trade. If I'm not mistaken, that was an $850 trade though. So for me, I was happy with that. However, you can see, even if you got in up here, there was no need to stop. But where is my stop if it goes against me? That's the question. How do I calculate my stops? How do I know this is an entry that I'm safe playing because I know my stop is going to be tight? Well, right here, just above this candle. If you could see a little wick on the top of this red candle, that was this candle at one point trying to move up, getting hit back down. That is a little level of resistance. Not only that, these candles rejected the same area as well. So if I get in at this line, I'm stopping myself out just above those wicks. That's about a 13-cent stop loss. 13 cents. If your stop losses are 25, 35, 50 cents away, it ain't a good entry. Do not take the trade. Okay? You need to use the chart to dictate every part of your trade. The chart is a roadmap. The chart is a roadmap. It depends on how you decide to play, Kevin. I choose candle closes. Some folks don't. Some people play wicks, whatever, mechanical stops. You guys have to know what you're going to do, and you've got to figure out what works for you in your trade plan and your risk tolerance. I wait for candle closes, period. Now, A+ setup, straight down to the next support. And then what happens? Well, we have another break and retest of the futures line. Where does it go? Straight down to the next level of support. Okay? We find support there, we take our profit. We get out of the trade. And we wait for the next setup. Okay? As you can see at this point, we've gone nowhere. We're not trending anywhere on the day. But we find the support. Is this candle a breaking candle? Yes, it broke down through 2 levels of support, and we pulled back and turned one of those levels of support into resistance. This is your retest candle. Okay? And straight down to support. We move back up. We have a breaking candle, retest candle, no good, no good, no good. However, now this, I wouldn't have said to buy down here. I know some of you did, though. I was waiting for a candle close above these guys. I looked at this as a level of resistance. So I said, if we break that resistance, I'd expect us to move back up to 425.78. This is the stuff that I'm saying in real time, right? If we break resistance of 425.09, we're going to head to 425.78. So we broke, we ran right up there. This is not a break and retest. This is just we broke through resistance and headed right back up. Now, if you want to draw a line here, guess what happened? So you had resistance here, you broke it with this candle, you retested it with this candle, and you went straight up. Hit resistance and pulled back down to support. Okay, so broke, pulled back, tested what was resistance. And again, I don't put a million lines on my chart, but I could see where candles stopped moving down and stopped moving up. And I can derive with my own 2 eyes that it is a level of resistance there and support. Old support becomes new resistance. Old resistance becomes new support. So if you wanted to play this as a break and retest, you could. And if you got in here, where's your stop loss? Well, it could be just below this teal line or just below this yellow line. Okay, but the point is, if you can't find something near your entry to act as a potential stop, I would skip the trade. I would skip the trade. You guys are starting to hear me say, this could be a potential break and retest, but I don't like it because the stop point is so far away that I don't know that I would take this trade. Okay, so we hit resistance, we pull back down to support, right back up to resistance. We have a break of resistance turned into support. Where are we going? Right up to the next resistance. Now let's check this candle, 940. Is it this guy? Nope. 940. Wait, what did I do here? 1040. 10, I'm sorry, 1040. This is 1040? 1040 is all the way up. Ah, this is a good one right here. 1040 candle on ADD is red. Okay. However, ADD is trending up. Let's see what the 1040 candle is looking like on Apple. Well, they don't have a 1040 candle, but it's green, green, green. All the other ones are green. So think of this as a 75% probability odd in your favor. Okay, if you assign these 25% each probability, look at it in that respect. Now, that is not to say that 100% means that the trade is going to work in your favor without the possibility of it not doing so. Okay, I can't guarantee that it's going to be a win. But I can tell you that I consider those A+ setups. Guys, hold the questions till after, please. Let me talk. This is basic shit here. The arrows are green, meaning it's going up, and red, meaning it's going down. I'm just trying to give you a visual representation of what's going on. Okay? So, the whole point, entry points. If you get in on this candle, where's your stop? Just below these wicks. Okay, we get up to resistance, you take your profits. You have another break and retest. On support, close stop loss. Where are we going? To the next resistance. Okay, take your profits. We pull back to support, it holds. What are we expecting it to do? Back up to resistance. Every time we pull back, we hit resistance, it either pulls back to support, which in this case was here. It's also a futures line. And it either breaks that support to the downside and finds the next support down, or it holds and it runs up to the next resistance, which we know is here because that line is there before the market even opens, which you will learn about on Monday. Okay? So, why wouldn't I have taken this trade? Well, I wasn't prepared. I wasn't ready. I didn't know after this sell-off here, if it was gonna, I'd probably have to check my Apple and all those to see if this was an A+ setup. Okay, but we did find support, ran back up to resistance. Strong resistance at that. And because of this strong resistance, I take that regardless of the momentum on the day or the move of the day as being very strong, and thus was willing to go as a counter trend trade. It was announced as a counter trend trade, and I was looking for this resistance to take me back down to support. Many of you guys were in this trade with me and listened to me take this trade. Okay, and what we decided on this particular trade was for me to take 4 out of my 5 off here at my normal profit target, even though my plan was to get out at the teal line, and I was able to take my 5th one out here. This was a $600 win. Okay, now let's go back to a break and retest. And again, this one's not worth taking because it's only about 30 cents between these lines. We have a breaking candle. First one's green, momentum's not on your side. Next one's red. Where does it go? Almost down to the next support, but within 5 cents of it. So I have a 5-cent rule for anybody who's wondering. If you get within 5 cents of your profit target, or for me, in my case, these lines, I start to get out of the trade. I don't wait for the exact candle touch. Why? Because you might run into something like this, where you buy calls down here, you're waiting for the touch of the yellow line. Yes, we're within 5 cents of that line, but by the time it made it there by here, you've given up enough money in theta that you should have just taken profits there. Okay, it's these lines hit to the penny very often, but there are times where it doesn't make it all the way to it, and you don't want to get caught in that mess. Okay, so once again, we break support, move down to the next support, break resistance, break and retest, right back up to the top. Okay, again, we're not calling all of them out, but after I had to go back and look at how many actual break and retests that were in this chart and how many of them worked, it was a lot. Okay, and for me, a move from here to here pays very well. If you're talking percentages, this is every bit of a 15 to 20% move. Okay, that's a 60-cent move. In fact, that's more than 15 to 20%. Okay, we pull back down, back to support, back up to resistance, and this one we talked about. This one, I told you guys while I was at lunch. Break, retest. And we struggled to move up, but ultimately we got within 5 cents of our profit target. And this trade paid 62%. 62%. Buying here, selling here. Okay? We hit resistance, we pull back, we break support. And if you want to call this a break and retest, it pulled back. And again, not worth taking because you're pretty close. Actually, that's about a 40-cent move too. But when we got into this range, we started to talk about how we were trading two sideways versus moving up or down. But long and short of it is this, guys. If you can learn to trust these lines and you can start to develop an understanding as if I'm going to buy calls on support and I have something nearby that acted as a support near my entry, then that's good enough to use as a potential stop loss. Your take profit has to be either a line that has proven to be in calls a level of resistance. Okay? In this case, if you bought here as a break and retest, you might say to yourself, well, we just put in a lower high here. I'm going to take my profits here instead of trying to hold out for the yellow line. That's fine. Okay, because look at what happened when we got there. We spent about 15 minutes struggling to get beyond that point, ultimately breaking through and getting to our target. But I don't like to hold through all that. And if I got in down here, I'm already up a good amount of money and I'm happy. Okay, so entries always should be at a line of support or resistance. Stack the probabilities in your favor by checking out Q's, Apple, ADD, and if you want to throw a higher time frame SPY on there, go for it. Look for a trend direction. Try and play with the trend. Okay, try and play with the trend. If it's an uptrending day, maybe say to yourself, I'm just going to wait for good entries on calls, no matter what's going on. Just go with the trend. Buy pullbacks on the trend. Look at how many times we had pullbacks once we'd established an uptrend on the day, which in this case, I would say once we took this out, okay, we moved up. We pulled back to what was resistance, turned support, had an entry there if you wanted. Okay, we had moved up, pulled back. You could have bought that pullback. Moved up, pulled back to support, buy it. Back to support here. Okay, it didn't make it all the way up. You might have stopped yourself out by breaking back below. Pulled back to this support, straight up. Support, up. Support, up. Pull back, up, pull back, up, pull back, up. I mean, you've got to add reasons that will give you a slightly better odds. Okay, just have the patience. In this case, there were 16 break and retests, and if that was the only thing that you were playing. The only thing you were playing, you had 16 opportunities there, which is, too many trades to take in a given day, in my opinion. Too many trades. Okay. Now, this is not intended to turn into a what would you do in this scenario? What would you do in that scenario? What does this mean? What does that mean? I'm trying to teach you what I use to justify entries. If I was buying puts up here, okay, puts up here, I don't have anything to act as a stop loss because we haven't been up here yet. So that makes me a little nervous. Okay? And if I bought them here, well, the pullback that last acted as a resistance was all the way up here. And when I say all the way, that's only a 10-cent move. So if you entered here, your stop would be up here. Okay, but if you don't have anything up there to use as a stop, don't take the trade. Don't take the trade. Remember the things we talked about: probabilities, patience, discipline, and then the 3 C's. Okay? Clarity, consistency, and consequences for failing to have clarity and consistency. If you're not consistent with your trades because you don't clearly understand what you're looking for to take those trades, there's going to be consequences. And unfortunately, in this business, it's a loss of money. It's a loss of money. However, if you've got the clarity so that you wait for those trades and you're consistently doing that, you will make more money than you lose. Now, I think we determined that this year I'm at like a 96% win rate, which seems impossible and unheard of. But you guys are in here with me every day. Many of you are starting to see the chart like I do and have found amazing results now that you have tweaked it a little bit to fit your style, or you're aiming a little bit lower for your profit targets. I am seeing more and more people have more green days. Okay? Now, I'm going to say this too, because you need to hear it by days. You need to hear it. If you were to take, we're just going to use a random number, $10 per day. If you were to take $10 per day out of the market, that's it, right? All of us will look at a $10 bill and say, well, it's only $10. It's a waste of time. Okay? Hear me out here. If you were to take 1 trade per day or 2 trades per day, whatever it is, you make $10 every day. And you have to be brutally honest with yourself with this. Assuming it's a regular trading month. Okay? It's a regular trading month, meaning we have 20 trading days. Okay? If you were to take $10 per day, add it to your account for 20 days, that's $200. How many of your accounts in here are consistently growing by $200 a month? Some of you are, but be real with yourself. If you are not consistently adding money on a month-to-month basis, then adding $200 to your account on a month-to-month basis, which seems insignificant on a daily level, is a huge improvement. And I'm not trying to make anybody feel bad or call anybody out for struggling. I'm trying to retrain your brain to understand and have the proper perspective. It's necessary. Many of us could comfortably lose a $10 bill in our day-to-day lives and not be devastated. So when you have the mentality of $10 is throwaway money, then it's not good enough when you make it in the market. That's what's happening. If you've attributed if you attributed $10 to being worthless, then it won't be good enough when you have it, when you make it either. And so what does that do to you? Okay? It makes you do one of two things. It either makes you hold on to that trade that you should be getting out of because we're at a line of support or resistance, because $10 isn't enough and you want to make more, or you won't take the trade at all, or you won't get out of the trade because it'll go against you. And the next thing you know, you're down $10 and you're saying, well, it's only $10. Well, who cares? Right? You get yourself into a really, really bad situation if you start to look at money the wrong way, especially in a business like this. Okay, I am slowly convincing you guys that adding what seems to be insignificant money, but consistent money to your trading accounts makes a massive difference. And not just in your trading account, but in your confidence, your outlook, your positivity, everything. It helps. And if you can learn how to spot good entries and learn how to manage your trades when they go against you, it's a game changer. And I know this because I've done it. My win percentage jumped significantly at the start of 2013. Significantly. Why? Because I stopped making the same stupid mistake that I made so many times in 2022. And that mistake was buying puts at the bottom and calls at the top. Basically buying the high of day and the low of day. I lost more money doing that than I made. Not overall in the year, but I'm saying that worked out for me less often than it didn't. Okay? So that's why I prefer pullbacks. I like to go through snow that's already been skied on because I know where it's safe. Right? If you've got fresh powder and you could hit a rock, you can fall into a ravine. You know, there's all kinds of things, the unknown, right? And that's how I look at the chart when we're making new highs of day. I've got no path. I've got nothing to tell me where I should be looking to get off this trail. Which means you've got to understand when to get off that trail. And many of you don't. And with these stupid rogue candles that pop up out of nowhere all of the time, it's not wise to hold these trades for a long period of time. It's just not. Okay? So please realign the value of money. Tell yourself, if you saw $10 on the ground and nobody was around to claim it, would you pick it up? And then would you be happy about it? If the answer to that is yes, then take it when it gives it to you on a trading day. Now, I'm not saying cut the trade short. At the very least, just put a stop loss so that no matter what, you make $10. Okay? We've all had rippers that go in our favor, that just fly to the upside or fly to the downside, and you just make a bunch of money. But if we get to a point on the chart that says you should get out here and you're only up $10, take the fucking money. Take the money. $10 is more than $0. Okay? $10 is more than $0. Nepo, let me ask you a question. Are you a consistently green trader? Are you a profitable trader? Okay. Well, then pick a number, as Sergey just said, that works for you. Right? Well, then this doesn't really apply to you. We're talking about taking advantage of small moves through the day. Most of these folks in here don't have time to swing trade or don't feel comfortable doing it. No, I always trade 1 minute. No, it's okay, Nepo. I trade the 1 minute chart. I trade a 1 minute chart, and I use supporting charts of Qs and apples that are set to 3 minute. My ADD chart is a 1 minute chart, and I do have a 5 minute SPY chart open. And I can tell you this, if what you're about to do, all of the candle colors of that time line up, your odds of winning that trade are very, very high. And if you can force yourself to wait for that setup, you might be surprised as to how fewer trades you can make in a day while making more money than you already are, if you're making money. Number two, you've got probabilities on your side. Okay. And number three, you're going to be adding money to your account in a much safer way by waiting for those to set up. Now, well, that concludes our little session. I hope you guys found some useful information in this video. I'm doing everything I can to try and help you guys become better traders. If you are not a member of this community and you enjoy content like this, this is what we do in here. We try and teach you how to become better traders. Please consider becoming a paying member so that you can have access to this type of information on a regular basis. Once again, thank you guys for watching. I love you guys. See you.